moderating this first panel. So we're kicking the conversation on just right now. So the first session is going to be essentially preparing you for lunch, literally. So not just the main meal you're going to have, but for the conversation we're going to be having over the next 2.5 days. So we're going to be having this first session focused on the topic of international tax reforms. All around the world, every geo, you have conversations around how nations are trying to deepen their tax penetration, how they are trying to mobilize for domestic tax revenue. And the global bodies are really trying to curb evasion, avoidance, and ensure that the landscape globally is conducive, not only for the revenue authorities or the government to raise money, but also to make the process foolproof, a lot more efficient. And so quite a lot of reforms are happening, from the BEPS initiative to the more recent, the two-pillar solution from OECD. But we don't want this conversation to be just Africa listening to what's going on around the world. So what does it mean for Africa? What does it mean for doing business in Africa? What does it mean to the regulator and the revenue authority? So that's where the conversation is going to be starting this morning. So we're going to be talking policy, but how it impacts you and what is the shape of the conversation we're hearing across the continent. We're going to start with a presentation by my friend and colleague, Taiwo Yedele. He was of the Orange team. If I follow what Daniel, started with, I think about 2 decades of his professional career, he was on our side, doing advisory and advocacy. And I think in the country, there are quite a couple of us that are kind of notorious for picking up on holes and challenging and kind of advocating for a fairer tax system, not only for the government, but also for the taxpayer. And I think Taiwo is very loud in the market. And so the government said, who is the loudest among you? Let's hang the responsibility on his neck. So they snatched him off. I haven't seen him wear suit and tie in a long while, but I think for being a member of the Green team today, he's in tie. He's been more of the Babariga. Babariga is the flowing kaftan that the politicians wear. The first time I saw Taiwo wearing cap with the kaftan, I knew they've gotten him. Because even if Taiwo wear the kaftan, you will never see him have the cap on. And then when the conversation around what he was asked to come and do, so he's heading the Nigerian Presidential Tax Policy and Reform Committee, which I'm so glad to be part of the team that did that. But Taiwo faced quite a lot of challenges doing that. And when I started seeing cap on his head, I knew he was ready for the job. So he's going to get us started and just set the context. What are we seeing around the continent? What are we hearing globally? And how does that impact us? And how do we prepare for the change that we're seeing? And what more do we need to do? Let me just warn you, Taiwo is going to be provocative. He's also going to be insightful. He's a teacher, he's a speaker. And so you're going to enjoy the next 35 minutes. After that, then we then have a panel to then drill down further on that. So without further ado, let me invite Taiwo Oyedele, the chairman of Nigerian Presidential Tax Policy and Reform Committee. All right. Okay.
Thank you very much. Good morning. Good morning again. Yes. One of my former, I didn't know which color PwC was. When I heard orange and red, I was saying, which one is PwC again? I remember when they changed the logo and the colors, I said, maybe it must be a woman that designed this new color. It was so colorful. Anyway, so one of my former colleagues at PwC called me last night and said, I learned that you're in your second home. Because I didn't tell them I was coming to Accra. So this is second home for me, so I'm glad to be here. When I got this invitation from Deloitte Africa, thank you, by the way, for inviting me, I was saying to myself, do they even know my view on international tax? Which can be very different from what you've been listening to or that you have learnt about. And I said, maybe it's good that you hear something that is slightly different. So just follow me, keep an open mind as I discuss international tax reform and the African story. In my current role, and Yomi is right. I was. Did I just stay here? Okay. So I'm the person who will be in jacket and tie and suits. I quickly found out in my role that it was creating a barrier. I had a session with lawmakers, quite a number of them in the room. And when we finished, one of them came to me and said, "Why are you always in suit and tie? Like, it makes you look like a consultant." And I said, that was a very useful feedback. If the jacket and tie will create a problem for the reform, why not? Why not wear the cap and babariga? So I had to look for the caps. You need to see me with the cap. And I say, yes, now they can listen to me at least. The barrier was off. So, the perspective I want to share with you is really how the dynamics within the international space is impacting taxation and by extension impacting us and the African continent. There's actually no such thing as international tax? If you disagree, just tell me one tax that is international. In the 1919-20 era, after the First World War, was the setup of the League of Nations, essentially just to make sure we do not fight ourselves anymore and promote commerce. And that's how the modern system that we refer to today as international tax emerged. Essentially, what we call international tax is actually how local, or if you like, domestic tax rules interact when you trade beyond one territory. So we call it international tax. I would also share with you my reservations about the OECD BEPS initiative and why I think it will not solve Africa's problem. The overview that I have for you today is to provide context because I like this about Bloomberg, says context changes everything. I'll then discuss with you Africa within the global landscape and how within the continent we are adapting within that framework to find what works best for us within our context. And most importantly, I'll then talk to you about the way forward. Where do we go from there? So, how did it all start? Particularly when you start talking about BEPS. How did it start? Well, it was first technology. Innovation came. By the way, we've always innovated. We just didn't call it technology. The ability to make fire out of stones, that was innovation, right? It's just not the internet. It's not AI. It's innovation. But then technology at scale, Internet of Things that you know very well. And then, remember this woman. So they said these multinationals, particularly the digital giants, were not paying their fair share of tax because government was running out of money. So they needed to find other places where money could come from. They set up this parliament committee and asked this woman to share it. It was Public Finance Committee in the UK. And we had the likes of Google, we had Amazon, we have Starbucks, and they came. They were well prepared to tick all the boxes. We had paid all our taxes that we were required to pay based on the law. And the woman said, we're not accusing you of illegality. We're accusing you of immorality. A new word was inserted into our lexicon that paying taxes is a civic duty. It is not enough to tick all the boxes. You must be able to convince yourself that you're paying your fair share. Of course, policymakers were confused. Even in the US Congress had a session where they invited the likes of Facebook, Apple, and they didn't even know what they were doing. Lawmakers were asking questions that were not adding up. And I said to myself, if US Congress is confused, which other Congress or policymaker in the world would understand this? Someone asked Mark Zuckerberg, how do you make money if you are not charging people to open accounts on your platform? And so on and so forth. I'm not sure they really have improved the understanding. Even the courts wasn't any better. I still can't understand why today the courts in many countries take the view that Uber riders are employees of Uber. How? How does that even make sense? If I go on YouTube now and I record myself and I have 1 billion views and I become a millionaire, Google is not my employer. But of course, maybe it's popular. So they said, yeah, the employees of Uber should pay them pension, pay them allowances. And in 2012, 2013, the G20 asked the OECD to help. They came up with the 15 action plans, essentially to say, how do we deal with this problem? But guess what they were not telling us? It was really the social contract that is broken. Because politicians were no longer performing their function effectively. They were failing. They needed to find other people to blame. Maybe it's multinationals are not paying enough taxes. My point is, if you fix this last point, we fix everything else. Because it connects also, whether it's multinational, whether it's local business, it's a contract whereby we need to ensure that every amount of revenue we earn from tax and non-tax sources we use for the purpose of society. And I won't go into all these details. Deloitte will do a far better job than myself. So you have, as part of the BEPS action plan, we came up with the two approach of pillar 1, pillar 2, which we call the 2-pillar solution. And what I want to share with you here is that the world, in my view, under the platform of the OECD, identified that there's a problem with the tax system, except that they decided they were going to solve less than 5% of the problem that they identified. Isn't that fascinating? Let me tell you how I came up with less than 5%. Maybe it's even 2%. So, you say multinationals don't tend to pay taxes where they operate and create value. Fantastic point, isn't it? Now, let's solve the problem. We say, by the way, if you're a multinational and you don't make up to 20 billion euros, you're free to go. If you make up to 20 billion euros, we'll find out whether your profit is up to 10%. That's 2 billion. You can make 2 billion euros and do whatever you like anywhere you find yourself because you don't hit the 10%. You're fine to play games. When you exceed 20 billion and 10% profit margin, we don't even tax everything. We'll preserve your 10% for you. Don't pay tax on these amounts. The amount over and above that 10%, that's 2 billion euros. We don't even tax all of it. We take only 25. You can also keep how much? 75%. we now start sharing it. Oh, we say, okay, actually, there are some countries, they're too small. We don't want to stress ourselves. If the amount they earn in your country is less than 1 million euro, yeah, let's be nice to smaller countries, 250,000. So if you fall below that, we don't care whether they're exploiting you, whether they pay the right amount of tax, deal with your problems. And feel free to do the math. I've done it. It's less than 5% of the problems. Globally, the size of tax revenue that the world collects is about $19 trillion a year. If pillar one, pillar two, pillar one in particular, if it works perfectly as predicted, maybe not predicted as planned, we will make $250 billion. And it's less than 2%. So my point is, these will not solve our problems. Therefore, particularly as Africans, we must think about what is important to us. What should we be focusing on? And I mentioned the social contract just a few minutes ago. 2 weeks ago, I was in Luxembourg. And before I went there, which I do always, especially if I'm visiting a country for the first time, it was my first time in Luxembourg. So I read up about them. And one thing I found fascinating is that you don't pay for public transport in Luxembourg. It's a small country. Just get on the bus and it's okay. So as I landed, which I always do, I like to engage with it. I call them the regular people. They have no contact at the state house. They do not know a minister or commissioner general. They're just normal people. So we got talking with my driver. And I said, well, your country is beautiful, small but rich, and it's good that you don't pay when you get into public transport. I was surprised at his response. Guess what he said? He said, yeah, that for those of them who pay tax, it is not free. That is only free for non-taxpayers. I said, can you explain? He said, anytime he gets on the bus and they say don't pay, he tells them, I paid already, because his personal income tax, he told me, was 33%. Just think about that mindset. In Africa, at least I can speak for Nigeria, you then take the resources of the people, you do some substandard projects, and then you have a commissioning so they can celebrate you for putting taxpayer monies at work. Imagine going to Luxembourg and say you want to celebrate free buses. The guy says, no, it's not free. I paid already. We need to develop that mindset about the social contract and by extension, taxes that we pay. So, what is the reality check for Africa? Now, I already told you BEPS will solve our problems. That $19 trillion of annual tax revenue, which by the way is about 64% of total revenue of government. So governments around the world make something in the region of $32 trillion every year in revenues. In Africa, our tax revenue is under $500 billion. So we're less than about 2.5% of the world in terms of revenue, very small. And we have a lot of activities and values being added or values being taken out of the African continent on which taxes may not have been paid fairly. Emphasis on may. But when you break it down to why is it that companies can operate in Africa, whether they are multinational, whether they are local, and may not have paid their fair share. When you analyze it, BEPS is base, erosion, and profit shifting. It's not tax evasion, right? Do you agree with me? It's likely avoidance. But the biggest problem of Africa is not avoidance. The number one problem is evasion. People just don't pay, even when they have the capacity to. Next to evasion is the policy gap, where we decide on our own to write the rules that ensure that some people don't pay the right amount of tax. We allow them incentives. We call it, we have good names for it, incentives. By the way, there's nothing wrong with incentives if you design it properly. And then you have loopholes just because the laws were badly drafted. You had whites in mind, and then your tax rules is gray and different shades of gray. There will be crisis. Sometimes we spend 10 years through the court process trying to find out who is right and wrong to pay tax. Why don't you make the rules clear? It's already hard and difficult to pay taxes. It shouldn't be harder trying to find out the taxes that I need to pay. Of course, there's the geopolitics aspect of it. Africa, were we on the table or we were on the menu? For a very long time, Africa take rules. We don't set them. And which is why when you look at the BEPS action plan, it wasn't reflective of our reality in Africa. It wasn't meant for us. The inclusive framework was an afterthought. How can we make it look like it was the whole world doing it? And even the inclusive framework, many of our countries were not invited. They're too small. It's a headache for the world to invite these small countries to be in the room. That's our reality. And the reason why I also said there's nothing like international tax, Mr. Trump came second time, 2.0, and said, listen to me, the whole world. You can do whatever you like with BEPS, but it's not going to be accepted here in the US. And then, because as far as he's concerned, the rest of the world should not dictate to America. And on the other hand, he said, why do we have internal revenue service and not external revenue service? Why can't America tax the rest of the world? So you're saying the rest of the world shouldn't even think about taxing America, but it's okay for America to tax the rest of the world. Now, whether you like it, whether you don't like it, Mr. Trump doesn't care, and America is just too big, you can't ignore them. And I was saying to my friend that, he said, how are we doing? I said, we're doing fine in Nigeria, except that, well, we don't know whether the bomb is coming. From Mr. Trump. He just wake up one day and say, I believe they are killing Christians. If you don't do something about it, I'm going to bomb you just like that. This is the reality of the world we live today. Many of the tax havens where they shift profit to, right, are not even in Africa, so we don't even benefit. And most of the things they are shifting to those places are from continents like Africa. Yet, we're not part of the people that set the rules. We're to take them as they have been set by the rest of the world. So, what should Africa do? It's not going to be easy, but we have to start first by understanding what the issues are and putting them in proper perspective as to how they impact our continent. We must find a way to adapt, if we need to, what the BEPS solution is talking about. And I came up with this concept of Africa BEPS, ABEPS, which is we'll sit down and say our problem is evasion, is bad policies creating the policy gap, incentives that create economic distortion, rules that are very ambiguous, out of date, difficult to understand, dispute resolution processes that are very complicated unnecessarily. We spend a lot of our resources and energy trying to do things that add no value, absolutely. Why does it matter? Of course, it's important because at the end of the day, we can only deliver social services and shared prosperity to our people if the social contract works. So as part of this, the African continent, for the first time, was one of the initiators of why don't we get the UN involved that is more inclusive by design? And it worked. And so our voice as a continent is being heard. And the UN identified that some of the issues that were important to us had not been catered for. Some of it includes issues around taxing rights. So you can say there is base erosion and profit shifting, but you haven't addressed the fact that you are limiting us from our ability to collect taxes from source, which is where the value has been created. You allocate taxing right and you say, don't tax royalty because you know we do not have intellectual property. We are net capital importer. You set the rules around interest, around dividend. We're supposed to take it like that. Those are bigger issues, if you ask me, for the African continent beyond BEPS. And essentially, you find things like the treatment of capital gains tax hasn't been properly addressed with the BEPS action plan. Nigeria, with the reforms that we are carrying out, we had some reforms around capital gains tax, and understandably, it's one of the most controversial because, and we know where the controversy is coming from. And to be honest, it's normal to fight back. If you've benefited for so long, and we're saying let's make it fair, and the fairness is not to your advantage, you would fight. And this is why it's important for policymakers, particularly on the African continent, to start with understanding first. And when you're trying to do any policies, please do not sit back and pretend you are the best thing since sliced bread. You need to engage. You need to co-create with the private sector, civil society, and all your stakeholders. You have nothing to lose and everything to gain when you have the right knowledge. Your policies are more enduring and they produce the best results. So Africa's tax to GDP ratio is still under 20%. For OECD, it's 34%. So we have a long way to go. We have our peculiarities in Africa because even though we like to call out the multinationals, for many of our countries, those multinationals are actually the ones paying the taxes. They tend to pay more than the domestic combined. I had a session with ATAF about 2 years ago, and I was speaking to the Commissioner General of Zambia Revenue Authority, and he said to me that 5 of their multinational clients pay more than half of the taxes in Zambia. I said, you should just set up tax offices in those 5 companies. Like, they shouldn't have to go to the tax office. Like, seriously, who would have thought that a handful of companies were funding a whole country and they're multinationals? But you know politicians, how they do their things. If they won the election, they go on TV and blame the multinationals. It's for those of us who are knowledgeable, particularly those who are experts, we mustn't keep quiet. If you don't educate them, then you become part of the problem because it's in our collective interest, enlightened interest, for there to be fair play and for all taxpayers to be treated equitably. So, within this global tax landscape, I already told you what the UN is doing, which is trying to balance it and ensure that our voices are heard. But we still have to keep asking ourselves, are we just amplifying our voices just for the sake of, yes, we spoke? Or are we really interested in execution with results? You know, there are 2 different things. You can feel good because you have spoken, but your problems remain. Or you can be more intentional and say, even if it's just 1 or 2, we have to get them implemented in a manner that would impact our continent positively. So what we are saying is some African countries are taking steps to see what they can do to address these issues within their own territories. And they are adopting or adapting or introducing their rules, which I have to warn, you have to do with caution. It's so convenient to say, let's introduce DSTs, Digital Services Tax, 3%. Of course, your population will clap for you. What they may not understand is, in fact, the DST will be paid by your people. It may make those multinationals less competitive. for your country, less attractive, and then they move elsewhere. Value is destroyed. So, whatever it is you want to do, be careful that you strike the right balance. And those balance are to do with certainty, compliance, burden, competitiveness, innovation, and just understanding the burden of tax. I hold this view that whatever you do to businesses, businesses do to their customers. You increase the burden on them, they pass it on because they're just vehicles for economic activities and they need to survive. If you want the life of your customers to be better, make the lives of the businesses a lot easier. So what we are seeing is many African countries are doing DSTs. In some countries, you have these significant economic presence rules. We're seeing MLI adoption, technical cooperation, and ATAF. I have to give it to them. ATAF is doing a good job. After I accepted to come for this conference, ATAF invited me to join them in Algeria for the annual conference that is going on as we speak. And I said, well, I have to be here because I said yes to this first. He said, okay, can you join us virtually? So after my session, I will run away to go and join them virtually. So these adaptations still come with challenges. Administrative capacity, just to even understand what is it that we're doing. When it was time to sign the treaty around Pillar 1, right? Some African countries did not sign. Some signed. Some were not even asked to sign or not to sign. And when I was interacting with some of these countries under the ATAF umbrella, it was clear to me that some of them didn't even know whether they should have signed or not. Some were asking, has this country signed? If they sign, maybe it must be a good thing to sign. Let's also sign. Because if you do the analysis, you will just see that by signing, it has a trade-off. You sign and there are certain things you can no longer do. So you must do your maths. When we did the maths for Nigeria, it came from signing was going to be less than 10% of what we can make by having our own sensible rules that do not make us less competitive, yet protect our tax base. And I'll share a few of that with you briefly before I conclude. So, but rather than complain about this, I'd rather for us look at it as opportunities. These are opportunities for us to grow our tax base in a very sensible manner. There's this narrative that has been around for so long that is not supported by data. That narrative is that you can make a lot of money from the informal sector. That's where your money is. We did the analysis in Nigeria, not supported by data. It turns out that about 97% of the informal sector players are nano businesses. Many of them are not even aware that they are doing business. They're trying to survive. The economists, I don't always agree with them, they said what we call entrepreneurship in Africa is disguised unemployment. So how do you tax someone who is roasting corn by the roadside? How do you tax a vulcanizer who is hoping and praying that your tires will lose pressure? How do you tax the person who is shining your shoes? If they have customer lining up from morning till evening, they're still a poor person. It shouldn't be taxing poverty. It's a contradiction to hope that your country will become wealthy by taxing poverty. And another concept is economy of collection. You know what the textbook says? Do not spend more than $1 to collect $1 of revenue. So, if I spend $1 to collect $2, the textbook says that's fantastic. You know the question we are not asking? What is the opportunity cost of the $2 that the taxpayer just paid? Was that the money to buy food? Was that the money to buy paracetamol? Was it the money to buy pencil and eraser for the kid to go to school? If that's the money you're collecting, it doesn't matter your economy of collection, you're doing the wrong thing. The whole essence of the social contract is so we can use resources to improve the well-being, livelihood of our people. If you cannot help them, don't add to their problems. So in Nigeria, we came up with our new laws exempting 97% of the informal sector from paying taxes. We want to focus only on the top 3 who have the capacity to pay. And we've seen other activities, even in Ghana, around trying to implement BEPS, in South Africa, Kenya, and so on and so forth. So in conclusion, because I now know that I have about 3 minutes left, how do we move forward? So I believe that Africa can work together because the reality is that we must accept that individually we're small. And there's power in strength. So if we come together, we're stronger. We can help ourselves build better capacity. We can share resources. We can share knowledge. And when we speak, the world will pay attention. So I see there's a lot of power in collaboration. That's why I've called it a collaborative balancing act. What does that mean? Let's start with capacity. Let's understand. Let's educate ourselves. Where we need technology, let's invest. Where we need to train our people, let's train them. Let's pay them well. You have people in tax offices who can't feed their families. Some of them can't even live close to the office, right? Because that's an expensive location. They have to travel miles, hours to get to work. And you just hope they'll be also patriotic to collect taxes diligently. It doesn't work like that. Pay them. Remember contexts? No 2 scenarios are exactly the same. So you must think about your country first. You must think about your people. You must think about their businesses. How can we enable our people to make wealth? How can we make our small businesses become large? How can our large businesses become multinational? When the prices of commodity go down in Africa, we panic. That's because we don't know where else to find dollars from. If you have multinationals, you don't panic because the cash will come. So it's in our interest to enable businesses, allow prosperity, and taxes, I always say, are the consequences of economic activities. If you want me to pay personal income tax, let's have a conversation about me earning income. If I'm unemployed and I don't have a job and you want personal income tax, it doesn't matter how good your tax laws are. It's meaningless how effective your tax administration is. You will not get any income tax from me. When I find a job, then we can talk. So do not place the cart before the horse. Economic activities first, and tax revenues will follow. We must collaborate because there's power in strength and strength in coming together. Like the African saying of, if you want to go fast, you go alone. But if you want to go far, you go together. I think Africa needs to go fast and far because we've lost time. And finally, we must execute. Don't just speak for the sake of speaking. My voice has been heard. Okay, that's the starting point. No result yet. How do we implement and monitor it diligently across the continent? Thank you very much.
Wow. Okay, so Taiwo, don't go.
Okay.
Just say it.
Thank you.
I think we can appreciate Taiwo one more time.
Thank you.
You agree with me that that was a very, I told you, it was going to be very insightful and provocative as well. So we want to have the next 1 hour to kind of dissect and have this conversation and take it further. Quite a lot of call-outs from what Taiwo said for me. First, it jumps at me that part of the big issue on the continent is how do we solve a disconnection, with the social contract. All right, so how do we do that? I heard from his conversation, all of the global initiatives are fantastic, but are they really solving Africa's own unique problem? We've got evasion, we've got very low tax penetration. You saw the statistic. Global tax to GDP ratio around 30. OECD is maybe above 35 from what is said. Africa is below 20. And you know that even 4% is skewed by some, if you pick a few countries that are above, there are significant big economies that are doing below. Nigeria, for example, I know it's just, a low double digit. So maybe we just narrowly move from 10 to something within the range of 12% or 13%. So we've got significant issues. So we're going to have the panel join so we can have this conversation and take it further. The profile of all my panel members, it's on the brochure, so I won't, waste your time to read the full details. Please go through. But please help me welcome Trupti. Please appreciate her as she comes. The Group Tax Executive at MTN. Very important that we have the voice of the client as we have this conversation. And then I'm going to have Daniel Noah, Technical Advisor, Minister of Finance in Ghana. Please help me appreciate him as he makes his way. Right. And the fourth panel member, not the least, Professor Ali from the University of Ghana. So please appreciate each of them. So from academy to policy maker to the client and, to the form of reform on the continent. So I'm just going to start by maybe just getting a minute reflections or insights, comments on what you heard, Taiwo, what jumped at you, what are the call-outs. So maybe we start from the extreme left and then work our way this way. Professor Ali?
Okay.
How do you react to Taiwo's presentation?
Thank you very much. I wish I was the third person to be asked. Because as a lawyer, when you go to the Court of Appeal, 3 judges, when the first one speaks, the rest say, I have nothing useful to add. I think Taiwo always speaks my mind. So when I go for conferences and he's present, I'm free. Because from the first one, the broken social contract is something I align with and keep complaining. Our problem is our politicians. And they travel and see how other economies are developing with their tax revenue. Yet they come back and the wastage and the corruption cannot be, In Ghana, for example, if you look at the Ghana Integrity Initiative and the CHRAJ, Ghana Commission on Human Rights and Administrative Justice, they tell us we lose close to $3 billion every year from corruption. Yet we go to the IMF for $3 billion for 3 years, meaning $1 billion a year. So we are at a net loss of $2 billion. Meanwhile, a Ridge Hospital here, a 430 capacity hospital, bed capacity, was built at a cost of $250 million. So the $3 billion corruption can build 12 such hospitals. So the social contract cannot be gainsaid. The other one I join him with is our badly drafted laws. My tax policy advisor is here. We keep complaining. And I want to add to what Taiwo said. It's not only the laws, but also the agreements. For example, you look at Article 12.1 of Ghana's Petroleum Agreement before 2013, and you'll be amazed when we state no tax, duty, or other impost shall be imposed by the state or a political subdivision of the state on a contractor, a subcontractor, or an affiliate of the contractor. You've given away all your taxing rights. How do you turn back and say multinationals, they've taken our revenue and they are going away? Who gave it to them? We did. Badly drafted laws and agreement. And lastly, we agree with him, the taxation of passive income. Like you said, we don't have the intellectual property. And we are giving exemptions and incentives. What is the withholding tax rate on royalties? Dividend, interest. They are bringing all the capital, giving all the loans, and the money goes away through all these passive incomes. And for the paradox you gave for one country, I think then Ghana, we are better. We have the 80-20 paradox. 80% of taxpayers bringing in 20% of revenue, and 20% of taxpayers bringing in 80% of revenue. These 20% are the multinationals. They are bringing in 80% of revenue. And you have the informal sector, small scale, medium sized businesses forming 80% of taxpayers, yet you get only 20% revenue. So if we are to balance the mix, like Taiwo said, we don't need all these BEPS and international tax issues. Just balance it to 60-40, and you can meet your revenue generated domestically and build our countries. Thank you very much.
Thank you so much. Please help me appreciate. All right, Daniel, Prof said the problem is our politician. So you are from the Ministry of Finance. How do you react to Taiwo's presentation and Prof's comments?
Thank you for the invitation. And I have a very simple answer to that. I always say that I'm a technical person. You don't ask a technical person political questions. So I'll leave that one for the politicians to answer. Yep. But then talking about the things that sort of jumped out at me. The first one was the fact that those of us who are most impacted are not the ones making the rules. And so there is a need for us to get into be part of those making the rules. It's one of the things that I'm sure we'll talk about as we go along. And he made a statement I made a while back. I think earlier this year, I was saying that we need an African solution, or we should have an African alternative to the international solution. It's important because once we have an African solution, we'll be working from a place of, should I say, strength. We won't be just takers. But right now, we have something which we can really negotiate with. And the third part is that, yes, we are being heard, but what are we seeing? Are we saying the right things, which is what we need to look at? Saying the right things, doing the right things, that will get us what we really want out of being heard. So those are three about basic things I picked from out of it.
All right. So Trupti, you are right in the middle, right? And for a reason. So how do multinationals? How do you heard Taiwo speak? So what jumped at you from sitting on the taxpayer side?
Yeah, thanks, Yomi. I mean, I think it was really interesting, and I think Taiwo spoke to a lot of what we face as challenges as multinationals. I think Prof spoke to it as well. So, I mean, I think my observations were a few, and if you don't mind, I'd like to run through them. I think the first thing is, if I talk about the global tax reform, I think Taiwo's point is very telling. Unfortunately, the rules have been crafted on what the global north would want to see and what would make sense in that environment. And I think what we're seeing as the receiving parties of the Pillar 2 solution is, specifically in the African space, is a legislation that unfortunately doesn't accommodate the African agenda. The war on talent for us is really prevalent. And I think what it does do is it forces us into a narrative where, and exactly I think as Taiwo said, we are taking the rules rather than actually being part of the discussion on the table, which is quite unfortunate. I think the second thing we face as multinationals is the divide between practice and law within the tax legislative environment. Often what we find is the law will say one thing, and whether it's poorly crafted laws or whether it is laws that have not kept up with the spirit and the test of time, is we do struggle with that divide of how do you interpret the law? And unfortunately, the interpretation is going to be favoring a revenue collection agenda. I think finally, I think sort of my colleague mentioned it as well, we need to own our African story. It is a world that, when you explain it to the global north, it is a very surreal experience. We are evolving very quickly, but we are a different continent. We are a multitude of cultures, a multitude of rituals and nuances that I think people don't truly appreciate unless you really walked the streets of a Ghana or a Nigeria. I mean, for MTN specifically, where I think it becomes really humbling is when you see the impact of our financial ecosystem through the Momo platform and how, you're trying to actually empower the unbanked and the unbankable. And that is the story we want to tell. And the way we tell that story is by owning what makes Africa unique. It also allows us to create certainty for the revenue authorities, create certainty for taxpayers. And I think to that extent, the social contract that we've spoken about, which is fundamentally strained, I think will go a long way if you've got a communication that's open and transparent. And at the end of the day, we are all fighting for one thing, to uplift this wonderful continent. We are not fighting against each other, but we want what is best for this continent. And I think that is an important story we need to relate.
Thank you, Trupti. All right, so Taiwo, I'm back with you now. Let me first congratulate you on the great work with the tax reform in Nigeria. The committee was inaugurated just a little over 2 years ago, August 2023, I believe. And in about 2 years, massive reform changing the entire regulatory landscape, in the country. As you were talking, you touched on the fact that Nigeria and a couple of countries are trying to, implement the two-pillar in slightly different ways, just in manner that is more responsible and that's more kind of adaptable to their own local situation. So Nigeria has got the top-up tax. Now, I just wanted you to kind of situate that and break it down a little more in terms of how each of the countries can still remain globally competitive while still, implementing domestic tax rules that will favor them. There are a couple of examples you called, what Kenya is doing, what South Africa is doing, what Ghana is doing, what Nigeria, is doing. I know you love Rwanda as well, as a model for the continent. I would just like maybe because the idea is how can we share notes, right? And how can we take what has worked on, in a particular economy on the continent to the rest of the continent. I would just like your perspective on that. What are we doing and how are we still remaining globally competitive while trying to do things that make sense to us domestically?
Yeah, excellent question, Yomi. So thanks for asking, because in this journey in the past 2 years that we've been doing the reforms in Nigeria, we've learned a lot from the rest of the world, including I've been here in Ghana, Rwanda, Kenya, and also outside of Africa, learning from everyone. But there's also a lot that we have to share in that journey. What our advice is, and this worked for us, we started the reform with agreeing on the principles. The tendency for tax experts is to jump into tax solutions, right? We started with principles. For example, we said we have to stimulate economic activities. We have to create a level playing field. Like the professor was saying, why do you sign a contract that says you don't pay any tax? We had a similar one in Nigeria. And it was a special economic zone. It says you can't pay tax to local government, state, federal, no tax. The intention was for them to compete with the rest of the world. People were investing there and competing with the domestic market. With companies that are paying taxes, how is that supposed to make sense? So, create a level playing field. Another one is just simplify stuff. This was the reason why we decided to repeal all the tax laws in Nigeria. All the major tax laws have been repealed. We wrote new ones. Because even the ones that were okay were difficult to understand. Why don't we just write as we speak so people can understand, not, pardon me, King James Version of English inside the tax law. We agreed that we will not tax capital. Just makes sense. Mr. President, our president, when he was signed, he said, we will no longer tax seed, we will tax the fruit. And that's instructive. We also said, don't tax poverty. And one thing I can tell you, stakeholders would agree on principle very fast. Once we agreed on those principles, we cast them in stone, such that when we started implementing, it was easier. It wasn't very easy, it was easier. Let me give you one practical example. We said the tax system needs to be progressive. Everybody agreed. The top marginal rate for personal income tax in Nigeria is under 19%. Corporate effective rate is more than 40. So that in itself was discouraging formalization. In most countries, it's the other way around. Top marginal rate for individual is meant to be higher than corporate. So people have the incentive to operate through corporate entities. Nigeria was the opposite. So we said, let's reduce the corporate tax rate to 25%, increase the top rate marginal for individual to 25%. In the room, there were the guys who will pay the 25%. And you can see the way the meeting went silent because they were not happy. And what I just did was to remind them, remember, we agreed before on this principle. So essentially, what we've done in Nigeria around BEPS, quite a number of things. We are renegotiating our treaties. We've introduced unilateral tax relief. So it's almost like Nigeria now has double tax avoidance treaty with the whole world. Because it's now in our law. Any country where you do business, you need to pay tax in Nigeria. We give you full credit for taxes paid abroad up to the level of taxes payable in Nigeria. We have reviewed our residency rules. Because before, you are only resident in Nigeria as a company if you were incorporated in Nigeria. Now we have this effective control and management, and we're defining the regulation for clarity. So that's also to bring back the tax base. We have things like significant economic presence that we introduced before, and it's working. One of the things we did differently was not to introduce the rules and expect multinationals will comply. We actually went to these guys. There are not very many of them, from Google to Amazon. We sat down with them and said, how can we make it work? I can tell you as of last year, we now make more from VAT on international services and import than we make domestically. You know, I have a premium account on LinkedIn, and LinkedIn sent me an email. I'm going to charge you Nigerian VAT from next year. And they're charging it and remitting it. So we also have those we've done around withholding tax, remote work. For withholding tax, we're trying to address director fees, if you are non-resident, athletes and professionals who perform high-value activities within a short period of time, even the big four accounting firm, for example. You know, so and they are not alone. We realize some external extraction of value from them within their network, which is, there's nothing wrong with it, but there has to be a limit to what you can extract from our location, because for us, we are interested in that. Not only are you taking value away, we have to go and find the FX to pay you. So we also have, finally, disclosure of tax planning strategy and annual reporting of tax benefit claims. So whatever benefits you've enjoyed, you understand it. Tell us. So that we can continue to rationalize whether these incentives make sense, both in terms of level playing field and ensuring there's value for money. And we are interested in your tax strategy. We don't want to stop you from planning your affairs, but if it's becoming a problem, we want to solve it. It could also be that you are going through those complex planning because there's one law that does not make sense. So maybe we just need to fix the law and you can do your business like plain vanilla.
Thank you, Taiwo. All right, so Daniel, I'm going to, just bounce the mic over to you. So just to build on what Taiwo was saying, so we're seeing domestic initiatives, right? From what Taiwo said and from the presentation, the UN model seems to be, a lot more relatable to us on the continent than the OECD. So we seem more aligned with the UN Tax Convention. So maybe you can talk to us on how the Africa Group advocacy for a UN Tax Convention is shaping our influence in this global tax policy, and what key opportunities and challenges might arise if perhaps the convention is adopted.
Okay, thank you. The Africa Group, and Tao made mention of something. He talked about the fact that our voices are being heard, but then how is it just being heard for what we say? And I'll start from that point, because an analysis was done. The UN Secretary General was asked to do an analysis of international tax cooperation and come out with a report on it. And there was that from the report, it was very clear that there was an issue when it came to international taxation. And this initiative basically was led by the Africa Group in um, the UN alongside the G77 with support from China and Russia. And so, with that understanding, the issue was we needed to have inclusivity in terms of the discussions. It wasn't supposed to be just one set of people making rules for everybody. As was said earlier, we as Africa, we have our culture, we have the way we think, we have the way we do things. And we sort of identified with what has been termed the global south. We have similar issues. So that conversation actually started with the Africa group leading. And we came out with, look, we need to have some level of fairness in international tax. So that what is the idea is that what is due us as revenue, those taxing rights, we should be allowed to have them and tax those items. What the global north has to, they also should be allowed to tax it. So, and the other thing was to create certainty for even businesses. Because we have the saying that when two elephants are fighting, the ground suffers. So then the person who comes to sit in the middle of it is the taxpayer or the multinational who has dealings across, and there's no real certainty as to what is happening here, what will happen here, what will happen here. So all these came about, and it was looked at in that context. Then let's have something like UN where one, you have everybody there, small or big. You have the ability to have your voice heard. And in doing that, what the Africa group looked at was, look, what were our major issues that also affected everybody else? So the issue of cross-border services came up. The issue of IFFs, illicit financial flows, or tax-related illicit financial flows, as we like to call it. Because once there's some illicit, there's some flow going out, whether it's from some diversion, whether it's from corruption, whatever it is, it means that most of these flows are not reported. And if they are not reported, it means that they might be coming from incomes which have not been taxed. So in looking at this, and these were things that cut across. So the Africa group position was that, look, what are the things that relate to everybody, which we can all identify with? And on that basis, these steps were taken. Now, one of the challenges from the beginning was the global north, as we like to put it. So, and there's been an interesting shift, because when the resolution came up the first time, the voting was interesting. We had 125 countries voting for the report that there should be something done about it. We had 9 countries abstaining. And we had 48 countries voting against what should be done at the UN level. But then the G77 African countries kept together. We had Russia, China, and a few others, and so it was carried. When it came to working on the terms of reference, there was an interesting shift in the voting. Because after the discussions, some parties didn't want there to be any committee to discuss international tax cooperation. Again, the Africa group and the like-minded, as we call them, the G75, worked together because we had common interests. That look, there's something needed to be done at the UN. The terms of reference committee, when they had they had 110 for having the convention, the terms of reference. We had 8 countries who voted against. Then we had 44 countries who abstained. Now, of that majority was those in the EU, especially, who now had shifted because they were among those who voted against in the very first place. They were part of the 48. They now shifted, most of them shifted, because the realization was there that what we were saying was correct. There was a need to fix the situation. And so they didn't want to vote against, and it was a shift because Big Brother voted against. And normally they will go with Big Brother, but they did not this time. Again, when it came to the actual setting of the committee at the UN General Assembly, at the second committee, same thing happened. We had 125 voting for, we had 9 voting against, and then we had 44 again abstaining. So they allowed for that. And that's one of the things, the cooperation that is now coming up. People are realizing that, the states are realizing that, look, we can do a lot more if we work together. And so that's one of the things. The other thing too the other thing that's also happened is that, yes, the Novanov has still kept some of his positions when it comes to the discussions. They haven't changed. But then we are all in the room and we are all talking, which is one of the major things. The challenge, major challenge, as maybe I mentioned right now, is our ability to keep together. To continue, the Africa group has always spoken as one. So when we speak at the UN, at the committee, we speak on behalf of the 54 African countries. We have a discussion amongst ourselves, and we agree on a position, and we take the position together. And like-minded, basically, there are some divisions here and there, but basically we come to something that we can come. So the main challenge will be if we get divided. And the other challenge is if we lose focus and have some negotiations where we have protocols and a framework that is diluted and that cannot be effective. And so we have technical people now as part of the committee. We are working with the technical people. I mean, we have the CSO, we have the ICC, we have business people, we have academia, who we are all working with in order to make sure that we come out with something that is fit for purpose and that will meet our needs. The other thing which some of us have advocated is that we should have an African position also, which forms a basis. The final challenge is whether when we come out of it, we as African countries will be ready to implement. That is, for me, the most important part. We need to be ready to put our, as Ty was saying, put our domestic systems in a place where once these things come out, we can take advantage of them and implement them for the results that we expect. Otherwise, we will have our job done in vain.
Thank you, Dan. All right, so Prof, I'll come to you last. I want to come to Trupti, and I would like you to just listen in as Trupti is responding, because you are going to be profiling some solution. I want Trupti to build on the comment she was making earlier. So, and essentially how multinationals are responding or receiving, all of this reform coming internationally, some of the development across the domestic market where you operate. So, how are you feeling them? So, are there some challenges, that businesses are facing, implementing digitalization, more transparency, increased boarding, compliance boarding, and all of that. So what are the issues? What are the challenges? And then Prof will help us kind of profile some solutions to some of the challenges you might identify.
Thanks, Yomi. I've been doing tax for over 22 decades. I wish I was 20 decades, but 2 decades is what I've been doing it for. And, it's interesting. I've seen the evolution of what was very much a very boring subject where people really just fell into it. It was very domestic centric. So, a lot of what we did was focused on your in-country taxes, some cross-border. Transfer pricing was probably the biggest stretch of the tax arm that, we would typically face. And the evolution and the speed of execution of the global tax reform has been breakneck. For many years, I sat on the other side as a consultant, and it was great because the quicker the momentum was, the better you could advise and support clients to actually face the challenges of what was coming. Sitting on the opposite side, it's very overwhelming. And, maybe if I start off with a more macro view of, some of the challenges we face. When we started talking internally about what do we do to accommodate Pillar 2, there were a multitude of factors before we even got into compliance around what do we do as an organization to keep ourselves ready for this huge initiative that we needed to do. And I think the first thing for us was, is the quality of our data sound enough? Our ERP system strong enough to accommodate the data extraction, the calculations, the over 800 data points that we're going to need to be able to populate a globe return. And that was before we even started talking about, do we have the right support from an advisory perspective? Do we have the right people? Does the Revenue Authority have the right capacity and capability to actually take these data points and digest them? So Pillar 2 was actually a lot of consideration around cost, people, process, and technology. And truthfully, I think as many other multinationals in the room would experience, data is our real challenge. No matter how much we try to scrub our data, ensure that we've got clean data that we're going to share with the revenue authorities, it is extremely difficult. And the data collection around Pillar 2 is particularly intensive, untested. And unfortunately, again, because we play to a narrative of the global north, is a lot of the experience that we need around empowering the African consultant, multinational around Pillar 2 sits in the EU. So a lot of what we actually need to uplift ourselves in terms of how do we run this journey internally comes from the EU. You know, we sort of barreled into finding a solution, setting up our ERPs, and then, you know, as Taiwo said, Trump 2.0 came in, and Trump said, I'm not prepared to take this. And, you know, suddenly as a multinational, we had to reflect on cost versus benefit. Do we know what is coming? Do we know if the Pillar 2 solution is going to be implemented in the shape and form that we're currently seeing it in South Africa, in Kenya, in some version in Mauritius? So we've actually stopped trying to in-house that solution. And I think, Yomi, just to give you the challenge around it, it means that we never truly on an even footing, because we're always trying to, the shifting sands. So do we insource, do we outsource, do we uplift our ERP, do we keep it static and just get a consultant to help us? And that creates a lot of stress in the system, because for a multinational, our primary focus is compliance. It is ensuring that we comply with the domestic laws, the international laws, which means that our systems must accommodate what we refer to as business as usual. And it's so the challenge that we face before we've even got into what is it from now on is, do we have our house ready to accommodate this new dispensation that's coming in? I think the next thing has always been, and you know, I think it's this, everyone calls it the race to the bottom. I'm not quite sure I truly understand it, but there's always been this tension about, I need to get in the qualified domestic minimum top-up tax, and I need to get the income inclusion into my rules as quickly as possible, because if I don't, somebody else is going to come and do it. And so, for example, South Africa is a good example. We had, you know, a very sudden introduction of the Pillar 2 rules in December last year. And my question is, okay, but what now? Do you have the people? Do you have the process? Do you have the technology to implement it? Because what comes with a Pillar 2 compliance is very onerous on both the Revenue Authority and the taxpayer. So for us, our challenge has been, are we ready for what is coming? I don't think we truly are, because I don't know if this has ever been tested. I know we've got the European space to see how far progressed it can possibly become. But I do worry that between a taxpayer and a revenue authority in the African space, I just don't think we have the bandwidth to accommodate something like this. And, you know, to some extent, I like Taiwo's suggestion about, do we make it an African-centric Pillar 2 solution? Because I think the wrong we are trying to remediate through a Pillar 2 solution is sound. But I think what we need to understand is we can't do a plug-and-play model. What works in the EU, unfortunately, is not going to work in its same shape and form in Africa. And I feel sometimes, and I think, you know, Daniel mentioned it, is multinationals are trying to do the best they can in the circumstances. All we want is certainty. The Pillar 2 solution, and, you know, pardon my analogy, almost feels like taking a sledgehammer to an ant. And I know the sort of big multinationals are not an ant in the bigger space, but it does feel like the rest of the multinationals are being made to suffer for the wrongs of a few big companies, you know, that have structured their affairs in ways that have triggered a Pillar 2 solution. I think the other point we do struggle with is the global reform is great, but I'm sure Deloitte understands it. I'm sure a lot of the multinationals understand it. We struggle with talent in Africa. We find that it's almost that revolving door. If at some point you're going to be in the orange machine, I was there with Taiwo, you're going to be in the green machine, you're going to be in the blue machine, you're going to be in the yellow. At some point, you're going to circle around into a corporate. But that talent pool is so limited. And often what we find is they are poached internationally, within cross-border African environments. And people, the younger generation specifically, love excitement. They love the ability to grow their careers, try something new. And so, unfortunately, what happens is you invest a lot in capacity building, knowledge sharing, empowerment, just to see them sort of move off into a different environment. That being said, I would quickly qualify that the experience that you get from actually running through the circle of a revenue authority, a corporate, and a consulting firm actually shows through a lot in terms of perspective. And I think Taiwo and I were having a chat earlier. A lot of the Nigeria tax reform is user-friendly because it is meant to encourage a two-sided view. It's communication, it's understanding that your taxpayer is not is not doing everything to avoid a tax. In fact, they really just want to comply with the letter of the law, and the revenue services is trying to protect their fiscal base. And between that, it is important that both parties have a voice, both parties are heard, that there's parity in the system, and that ultimately there's certainty. Because once you know what you're navigating it in an environment where there's comfort, there's transparency. And again, I think I'm using a repeat of the word, the social contract is rebuilding for purpose. So the challenges are a lot, but I actually think challenges are opportunities for us to learn and make ourselves better across the spectrum.
Trupti. So I'm going to take Prof and Daniel, but just immediately after that, I'll have time to take about 2 questions from the room, just to make this a dialogue, so we're not talking at you. So if you really do have questions, so please get ready, make it brief, make it direct. So you may direct it at any of the panel, or just throw it out there for any of them to react. So, Prof, I'm back to you. At the core of all of this is domestic revenue mobilization that is so needed to defray, the cost of infrastructure and running the government on the continent. Now, but we also need to do this responsibly. Now, so what I really need you to talk to, maybe speak to policymaker and just help us identify, maybe on the one side, in addition to what Trupti has said, what are the challenges to doing this responsibly? But more importantly, are there policy recommendations of what we really should be doing on the continent to deal with our problem the African way and the right way?
Thank you very much. I think talking about what Daniel said, having one voice, it shows our biggest challenges of the regional unity in Africa. Talking about AU. As Taiwo said, you find out that ATAF are doing their best, but the question is, how are they being supported? More so looking at African unity with the breakaway of the Sahel. You see, we are having a challenge. So the unity will give us the purpose. Now you have to even work within to bring the alliance of the Sahel states to join you instead of forging ahead. Then we have the challenge even in-house in our various countries, national interest. We don't have plans that are meant in our countries for posterity. Governments win power, and they have the agenda. So if you go into any tax policy direction, a new government may come and change it. So it is high time we have national. I'm always impressed with the Nigerians' national tax policy. I've always been part of it, and I've been fighting my brother here. where is Ghana's national tax policy? And he will tell me, it's in our strategy document. That tells you where we have the challenges. And the other issue of the vision, like I'm saying, can we have a vision for the continent, which is broken down that every country would also work towards? And then, as Noah said, when we go for the dialogues, we have one vision mission statement to put across. But you have the challenge of, we are still battling, as Taiwo will confirm, the Anglophone, the Francophone, getting harmonization of our tax policies difficult. And that is one of the things we need to look at. Because without that, we have the challenge of the race to the bottom of harmful competition. We are throwing incentives to attract investors. And like Tao said, we turn around and blame the multinational. MTN didn't ask you for favors. You say, oh, MTN, I've heard of you. I want you to establish in my country. I'll give you this, I'll give you that. You won't pay PAYE if your staff are not more than 80 days in Ghana. They will come, but you lose the employee taxes. And then, like Taiwo mentioned, administrative capacity of our revenue administration, they need to continuously build on capacity. I was happy when Commissioner General said he wants to get the outcome of this discussion. It's one area you need to let him know. Capacity building, they should never stop. We always need to. Because Noah will tell you, when they go for meetings, I'm sure you can see where people are. I remember battling with Daniel Noel when we decided to do withholding on VAT. I said other countries have abolished it. And we are going to pick it to do what? You are already struggling with withholding tax on income. Now you want to withhold on value added tax. It becomes administratively difficult to roll out. Then attached to this administrative capacity is data. Taiwo mentioned something we also have in our law, the unilateral tax credit system. Because we've moved to worldwide income taxation, wherever you earn your income, you pay tax in Ghana. And so if you have evidence of taxes you've paid in the other jurisdiction, you can claim your credit. But then what is the data? How are we linking up with our signing of multilateral exchange of information agreements? How are we rolling it out, actualizing it to the benefit of investors within the continent? So when they know it's all the same, like we did with common external tariffs, then they know if I go, import duty is 20% across, then they know how to plan their investment and businesses. So those are the issues I'll raise. Thank you very much.
Thank you, Prof. Okay, so Taiwo, just a question before I throw it up to the audience. I think I like the fact that you called out what a couple of countries are doing on the continent. I just wanted you to maybe do some spotlight on some other great initiatives you've seen across the continent. So let it not just be about we flogging ourselves that we're not doing things right. Are there examples you've seen in some countries on the continent that are doing great things? That could be an example. So what have you seen in Rwanda? Is there something that jumped at you from South Africa, from Kenya, or from Nigeria that other administrators could hear about and maybe use that as a template for what could be done in the rest of the continent?
Yeah, so that's a good question. Actually, Africa is quite diverse. So you see a few, I'll call it shining lights, and you see quite a number that are struggling just to even understand what they're doing. But there are good examples across. South Africa, for example, have a very modern tax system, and I particularly like what they've done with regulation of tax agents. One of the problems with the tax system in Africa is the level of corruption. We just need to call it out. And that corruption is aided and facilitated sometimes by willing taxpayers, very ready tax officers, and the tax agents intermediating between the two of them. If you really want to solve the problem of the system, you must address that. And it's not something you address by preaching to people and their conscience. It's by designing a system that becomes a deterrent. We've tried to do that under our new reforms in Nigeria. One of the things I picked from South African Revenue Service, SARS, is the fact that they already adopted and incorporated AI. into how they track the behavior of taxpayers. And in fact, I saw one of their reports, I think it was last year, saying that they've identified a number of tax agents who were not compliant. And their view is that if you're not even compliant yourself, how can you help the other person comply? And then, we're planning to de-accredit them so they can no longer represent taxpayers. Rwanda is always a very fascinating example of a small country that I think, by my own estimation, I would easily rank as number one in Africa in terms of even just the thinking of how they want to advance the system, how they connect it with the whole ecosystem. One of the things we pick from Rwanda, which they did, in our view, more than most countries in Africa, is fiscalization. So, and the way they've implemented it is they've linked up the entire system. You go to Rwanda and you are selling your car, and on the system, they just literally move the car from party A and move it to party B, sold the car. On their system, they can just zoom in and see which property has been paid property tax, because the system puts a red flag on top of that property, and all the details of the person owning the property is there. You import goods. From when you are clearing it at the port, Rwanda Revenue Service is putting the inventory on your system on your behalf. Each time you issue an invoice to sell one, they reduce it by one. If you operate out of the system does not capture it. When you show up at the end of the year, you say your inventory is 300, they see 700. You have to explain the delta of 400. So, fantastic example. Kenya also has, one of the things we're trying to do is how do you bring, and also in Ghana as well, how do you bring the customs service with the revenue service? Custom has three important functions. There's trade facilitation, revenue collection, and border protection. We think that trade facilitation and revenue collection should not be with customs. It's a revenue service and an economic management issue. They should just protect the border. So one of the things we learned from Ghana is still work in progress. And the whole thing about that is, apart from the intelligence we're able to get, it also helps with international trade. In Nigeria now, we are introducing and implementing the national single window. So instead of having to go through 14, 15 agencies to import or export, you do it just once. And if you import these mobile phones, the incentive you have is to under-declare for custom duties. Your incentive is different when you are filing returns with the tax man. You want to overstate if it's possible. Now, if the system don't speak to themselves, you do that and get away with it. And then we keep going back to the same set of taxpayers who are trying to do their best. We audit them until thy kingdom come. Because it's not driven by data. It's not driven by intelligence. It's almost like rewarding those who are evading taxes because they are totally under the radar, and punishing the guys who are trying to. That has to change. So, but my point, and I like your question, let's not come to this room and beat ourselves up. There are good examples across Africa. We just need to scale it up, and we need to connect the dots so that you're not doing the right thing with right hand and doing 5 bad things with the left.
Yeah. All right, so I have time to take 2 quick questions. We have 10 minutes left for this panel. So can I see by a show of hand if you've got questions? The roaming mic will go around.
Don't worry, I'll.
All right, so make it brief and direct. Yeah.
So brief, 2 questions, one to Tayo and one to Trupti. My name is Francis Timo. My first question has to do with what Tayo said about the informal sector. Indeed, the ILO says that about 84.3% of women are in the informal sector. When you come to Ghana, 92.3% of businesses registered are in the informal sector. You made a comment that those people don't bring in much, and therefore, in Nigeria, you want to focus on 3% of the taxpayers so that the 97% you exempt them. My question is, isn't that scary? Because if, for example, in Ghana, they contribute 35.5% to GDP, why should we not rather try and formalize that sector There was a video in Ghana where a porridge seller was making 31,000 Ghana cedis profit on a monthly basis. Compare that one with a security person who earns 700. Is it a good policy to just ignore that sector? Or we will have to properly design tax policies that can help us raise revenue from that angle. Now, my second question to Trupti. I want you to share your views. You made a very important question that we take in some of these international laws, we just take it in without forming part of it. In Ghana, for example, transfer pricing, we have adopted a concept that for transparency, we should use country by country report. Ghana has adopted that idea from the international world. Yet the way we go about it, we decide to do it differently. Instead of we signing on to an agreement which will help us exchange such transparent documents, we say we're not going to sign. From where you sit, what will be the recommendation for some of these laws? Do we continue to just take it and swallow it? Thank you.
Do we have one more question? A lady preferably, so we can balance it out. No one? No other question? Okay. No, that's the person I'm seeing look like a man. All right, okay. Let's have it.
It's Musa Manyati. Thank you for a very insightful presentation and the insight shared by the panel. I just want to ask a very quick question around the trust between clients, and maybe this question is actually directed to you, Trupti. So we're talking about how complex the legislation is becoming. We're talking about what the regulators, the revenue authorities are doing, but maybe what we haven't touched on, which I am very interested to hear on, is do you feel as a client that with all the legislation that is coming, there is a focus by regulators, by the revenue authorities to also try and grow the trust between the taxpayers and the revenue authorities? Whether you are talking about the e-invoicing, whether you are talking about the Pillar 2, whether you are focusing on data, at the center of it is the fact that the revenue authorities do not have sufficient trust of clients, of taxpayers, which is why the legislation is becoming much more complex, and we're being overshadowed over seeing a lot of all of this legislation coming. So do you think there is sufficient measures that are being taken to make sure that the trust is also being built and also being established between the tax administrations and the clients? Thank you.
All right, so we'll take that in maybe 2 minutes max each. So we have 1 minute or so for each of us to have, or each of you rather, to have your parting shot. So Taiwo, do you want to start?
Yes, I'm happy to start. Great question. Thank you for asking. 84% of women in the informal sector, according to the data you quoted, and I believe is consistent in many of our countries. If you ask yourself for a moment, what do women do when they make money? And the answer is so obvious without responding to that, right? It's just to cater for the family. So if you have a continent where there's so much poverty, are those the people you want to target to extract money when we already know that the public sector is less efficient in utilizing resources compared to the private sector? In countries where they have more resources, what you do is to define the poverty threshold. And anybody who earns below that, not only is it that you exempt them from paying taxes, you give them credit every month so they can meet their basic needs. We haven't done that analysis well in Africa. So this is how we came up with our own conclusion in Nigeria of 97% not to be taxed. But at the same time, we're not saying just don't pay tax, just be there. No, actually, we've designed a system that will encourage them to formalize. For example, the 0% corporate tax rate only applies to you when you register a small company. Our registrar of company, we call it Corporate Affairs Commission in Nigeria, has declared it will register 250,000 businesses for free. So we already see this excitement even on social media, people wanting to register. So what we're trying to do is help them formalize. What you see that once you register like that, governance would increase. You need to register, minutes of meetings, appointment of directors, you must do accounts, and those things have bigger benefit beyond taxes. The whole idea being that in a matter of 1 or 2 years, majority of these companies will rise above that threshold and then have the capacity to pay taxes. So for us, it's not totally ignoring them. We're not. We're saying let's support them to become bigger so they can pay taxes. One of the other things we're doing is we're setting up the office of the tax ombud. So they call it ombudsman. We removed the man because it could easily be a woman. So and we're saying now to this informal sector, if anybody comes to you harassing you about tax, there's help on the way. As we are calling to complain about harassment, about taxes, it's also data for us. Data about who you are, the issues you face, policy dimension to it. We think that in the next couple of years, we'll have a model of what works for Africa that even other countries can learn from.
Francis, thanks for your question. So I think my response to you, sorry, it feels like there's an echo, is for me, it's around tax certainty. And I think the reality is exactly the example you're mentioning, is that there's an international best practice around the filing of country-by-country reports. Ghana has a unique legislation to accommodate that. And I think as taxpayers, it is important that your international compliance has an embedded certainty in it. So if the access to the country-by-country report is done in a particular fashion, and that is what taxpayers are accustomed to, I think it does create a little bit of complexity when a specific market adopts a different position. And I think my response to that is communication. Is it practical? Is it achievable? Is it realistic? Is it accessible? And that's a discussion that the taxpayers and the revenue authorities must have, because the point is that compliance is key. The legislation must be simple enough to comply. And if it does prove to be challenging in a way, it is important that those challenges are raised, because again, it's meant to be an enabling function. It's not meant to distract the nature of compliance. So Francis, I hope that answers your question. And then I think, Musa, to your question around, do I think that there's enough being done? Look, truthfully, I think on both sides, from a revenue authority and from a taxpayer, a lot more can be done. For me, it's an iterative journey. It's like a marriage. I don't think with the day you get married, it doesn't take effort, right? It is a constant dialogue. It's a constant engagement. There'll be days where things are going really well. There are days where things are very adversarial or controversial. And building a relationship requires a number of fundamental components. Trust is the end game, but between that, there's a number of milestones you have to achieve. So it is say-do ratio. If you say you're going to do something, do it, and that's on both sides. So as a taxpayer, if I say I'm going to ensure 100% compliance with minimal errors and all taxes due will be taxes paid, I'm going to earn the trust of the revenue services. If the revenue services has a certain protocol around the calculation of provisional taxes or the assessment of returns or transfer pricing for that matter, and that is applied consistently, then it allows the taxpayer to feel comfortable that the process is following its course. But it is a journey, and it's not just if I'm going to meet with a taxpayer once or if I'm going to meet with a revenue authority once, that journey is going to be laid out in golden bricks for the rest of the duration. It requires a lot of effort, particularly as things are evolving all the time. And I think it is important that when they're contemplating legislation, that it's done in a very consultative forum. So I really like, what the US Tax Convention and the Committee of Experts are doing, which is engaging the private sector. The ICC is a good example of engaging the private sector. The law is not meant to be the stick to beat your taxpayer. It is meant to be the tool that enables growth in a country. And so that journey is a journey you have to walk together. And again, sorry, I'm going to steal Taiwo's words. For a country to see change, you have to walk that path together. And together you go faster and further. And that's important.
Our time is completely done, so I'll take that as a part. Maybe just one word or a phrase or mark 30-second statement from Daniel as we wrap up. What do you want to leave us with, Prof?
I think what I will leave is what Taiwo said. We need to have consistency and simplicity in our tax laws. Once people understand it, compliance becomes easy. Thank you.
Simplicity. All right? That's all?
Right, for me, is basically the fact that we need to work together and agree to be able to get to where we all want to get to, both businesses, states, and the international community as a whole.
Partnerships. I'll take it. Right? Taiwo? Shruti?
No,
okay. All right. Taiwo?
Yes, we say Africa's tax to GDP ratio is low and it needs to get higher and better. But let's remind ourselves, a country like France collects 44% of tax to GDP ratio. That's over €1 trillion a year. They still can balance the budget. So for Africa, the lesson is, as you're trying to grow the revenue, it's not enough to collect more. We must spend better.
Thank you so much. Now that we're ready to release you for lunch, can you help me appreciate this panel? Like someone who's ready for lunch. All right. Thank you so much, Prof, for your insight. Thank you, Daniel. Thank you, Trupti. Great insight. Taiwo, thank you as always for being here. It's been a great and insightful session, I believe. I hope you found something useful for your business or for the government that you represent.